Welcome back to Upside Down Data. Let's talk about Cardano. Okay, so Cardano has moved up in this bull market like you would expect, and currently it's up from the lows around 150%, was up as high as about 240% so far. So respectable, but not blowing the doors off. Certainly not anything like some assets that have been put in massive multiples. Cardano has been somewhat lagging behind. Now, one just structural reason why that's probably been the case is that we have to remember that ADA is a pretty large market cap asset. It's currently sitting at 21 billion in its market cap. And so what that means is it's just going to be harder to move ADA's price around. It's probably going to require more inflows to move it up some amount than, for example, some small cap or certainly some micro cap. It's filling a different role in one's portfolio. This is not a place to look for a quick 10x, for example. And really, the role that large market cap assets play in a portfolio is pretty clear if you look at something like Bitcoin, for example. The reason that people buy Bitcoin in crypto is not because they think it's going to give them the largest absolute return of anything that's possibly out there, but because of the relative safety that it affords to the degree that any crypto asset is safe. Basically, it's less likely to tank as quickly as maybe some microcap that could go to zero very quickly. And so the idea with ADA would probably be something similar, that someone who is investing in ADA would probably do so because they think that it is going to go up in the long term, but also that it has that relative maybe safety if it's a larger cap asset and they think that it's relatively protected from those massive crashes, or certainly protected from just going straight to zero. Now, obviously, it's up to the individual investor to decide whether or not ADA is really the best asset to be buying for that role, but that's the kind of role that is probably filling given this large market cap. And so in some ways, it not moving up as explosively as some of the other assets, especially ones that start off at lower market caps, is not entirely surprising. Okay, but that's kind of a broader kind of consideration just in terms of where it falls in market cap and the different things that go along with that. What I really want to focus on in this video is what some of our models are seeing with ADA, both in the short term and in the longer term. So let's start off with the short term. So this is the short-term UDPI. So this is a model, a risk model that we have for ADA. So higher values mean higher risk, lower values mean lower risk. And you see it does a really good job of capturing these low risk points in ADA's history, as well as these higher risk points where getting out of the asset was advantageous. So more recently, we did get the quite high short-term UDPI levels, almost up to 3. So the max of the scale is 5, got up to 3, suggesting that a good amount of the realistic short-term upside potential that ADA had at that point in December had gotten tapped out. We then went and reset all the way back down to about negative 2.3, basically back to the same levels that acted as local bottoms in the past, the recent past. And then we rallied again, and now we're cooling off again. And so really what we're seeing here, kind of just a continuation of this general bull market type behavior, where we go up and realize some of the upside potential, come back down, realize some of the downside potential, and then realize some of the upside potential, but not getting to the super extremes that tend to mark pretty extreme points in the market, like, for example, the all-time high, or this kind of big parabolic move that had to cool off for a while before the next final leg up. So it would not surprise me to see this continue. Basically, some kind of oscillation on the short-term UDPI, where we go back down to lower levels again, and then ADA starts rallying again. We come back up, we realize some amount of upside potential, and then eventually, at the full-throated point of the bull market, whenever that would come, then I would expect us to get up to these really high levels again. But I don't know if we're necessarily there yet. And so really, we're kind of in the middle of things right now, where we're at a risk level where, not surprising at all, if we have to go down a bit further, let risk reset more before that next leg up happens. Now, the other reason why I say that is looking at our trend confidence indicator, or TCI. This is a model that cares all about trend, as the name implies. And really, the way that you can look at this model is how is it moving relative to price. So if you see the TCI start to move to the upside, that tends to be a bullish sign, and price often will follow. Then vice versa, when you have the TCI start moving down, price often falls to the downside as well. Now, more recently, if we just look here, the TCI has been moving down relatively aggressively more recently. And really, until we see a reversal on that, I'm not going to get too super excited about the prospects of ADA in that time period. I think we need to see a reversal to the upside before we get too hopeful in the short term. So that's where, again, I do think that us continuing to see risk cool off to the downside might make sense, because we haven't seen the TCI start to show a bullish sign that might suggest a reversal to the upside in the shorter term. So those are a few things that I'm thinking about in the short term for ADA. But really, for a lot of people, they don't care about that short term consideration. They care about the long term. What is ADA looking like in the longer term perspective. So one of the models we can look at from that perspective is, again, our UDPI, but instead of the short-term version, we're looking at the long-term version of this risk model. So same kind of general interpretation, but the moves that it cares about play out over months, not the days to weeks like the short-term version. So you can see that, again, in December, we got up to pretty high risk levels on the long-term UDPI, about the same levels actually we were at the all-time high. So it makes sense for us to have a cool down off of that. But then we came down to really reset. We actually were continuing to move down as price went up. But now we're right around neutral. And so what that means is that in the long term, kind of in that months out perspective, the model thinks there's about an equal amount of upside potential that's realistic as downside potential. So we're kind of in the no man's land again here. So that's where really in the short term, looking at things, and in the longer term, we're kind of in no man's land in terms of what makes sense in a more kind of short-term perspective, and also in the long-term perspective. Those things are kind of going both ways. Now, it's not necessarily a bad thing that we're at neutral, right? There's still plenty of room to the upside to work with, and certainly this could cool off and move down lower, and then you might just expect us to have a better rally whenever that materializes. But in this moment right now, things are kind of in that no man's land. That's kind of the way I'm looking at this. Okay, but now let's talk a little bit more about kind of that longer term trend where we think that ADA is going to go. So this is our forecast model. So the way that this works is it basically outputs a probability of how likely it is that the price of ADA will be above where it is right now 6 months in the future. And you see it does a really good job of identifying these bullish times where price is generally going to trend up. And then especially in bull markets here, really catching this as things really moved up. Then as we moved into the all-time high, really getting bearish through here, then into the bear market. But then as we kind of came around and started kind of consolidating here, then put in the lows through here, it started getting quite a bit more optimistic. And especially here leading into this run, got all the way up to 84%, then 85. Now I got a little bit worried about this run here, thought some downside might be coming, but then it kind of recovered soon and then got all the way up into the 90s. And it's currently right around there at 89%. So it's overall basically saying that it makes more sense in its mind to have a bullish outlook on ADA over the next 6 months than a bearish outlook. Now, 89% is not 100%, but it's a heck of a lot better than 6%, for example. And so that's kind of what I'm looking at with ADA right now, is that if I'm going to pick a direction, the forecast model is very clearly suggesting that a bullish outlook still makes sense, still is the more likely scenario than a bearish outlook. Now I'll have to watch it and see if that changes, but for right now, that continues to be the case. And another model we can look at that kind of gets at a similar idea, or at least can help us with that macro picture, is the momentum bias indicator, or MBI. So that's what I'm showing you here. So this cares about momentum, and really what it's looking at is the dominance of upside momentum versus downside momentum. Is the momentum biased to the upside and just kind of really wants to push up, or biased to the downside and really wants to push down? So basically being below zero would be negative momentum bias, and being above zero would be positive momentum bias. And what you see on this model is distinct types of behavior at different points in the market cycle. So in bull markets, you spend a lot more time in the green than in the red, just very brief attempts to kind of come down to the red, but then you just quickly go back up. Then the opposite in bear markets, a lot of time in the red, very brief blips into the green, but not very sustainable. But then you go into these periods of transition out of the bear market into the bull market. And that tends to be characterized by oscillation above and below zero. So kind of just hanging out around that level. You spend some time in the green, some time in the red. And then now what it looks like is that we're actually entering back into this early bull market, early to mid bull market type behavior for ADA. We're spending a lot of time in the green, blip down into the red, back up to the green. We might be going down to blip down to the red again here, but I would expect this to continue. That kind of in combination with the forecast model that suggests that a bullish outlook in the medium to long term makes sense. I would expect that for now, we're probably just going to continue this oscillation where we have those legs up, we then come down and we kind of consolidate or correct. Then we have that next leg up and we kind of just keep doing that. We kind of just keep oscillating around zero. And then eventually that might lead into this build off into a big blow off top, like what we saw through here, where we go really high in momentum bias, but then that becomes unsustainable and eventually leads into another bear market. That tends to be the way that these cycles play out. This is not just with ADA that I'm saying this with the MBI, but really any asset you look at the MBI for, it'll show those same types of behavior. I'd expect that to probably be my base case of how things are going to play out. Unless something really crazy happens like a recession or something like that, I think it makes sense to have that as a base case. And certainly so far, it's just looking like prior cycles. So I think that makes sense. So to wrap us up then with ADA, I think it's one of those things where ADA has been underperforming a number of other altcoins in this bull market so far. But in some ways, that's not unexpected, given that it was just starting from such a higher market cap position. It just is harder to move assets at this large of a market cap in as dramatic of a way. And ultimately, it's up to you to make your own decision of whether or not you think that ADA is a good investment relative to other assets in the space. I'm not really going to comment on that here. That's not the focus of this video. I did make a video where I basically did a machine learning forecast of how high it's plausible that ADA's price could get in this bull market. So if you're curious about that, you can check that link in the description. But really what I'm seeing then kind of internal to ADA in terms of where it's going is I think we're kind of in a bit of a no man's land right now in the short and in the long term. And I think ADA might need to spend more time letting risk cool off before we're really going to be confident in the next leg up. We'd like to see the trend confidence indicator start to look more favorable, but then kind of longer term, a bullish outlook remains reasonable. So obviously not financial advice. You should make your own opinions about the market and what you think is best. That's what I'm seeing right now. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there. And also you can go to our website, partydigital.io, to see live data for our models and more.